Hey everyone, this is a trader investor. In this video, I want to show you how we came out of hibernation. The last 2 days in the SPY, we had no trade. We had no trade because we were contained in double tops. We were contained within our opening range of each day. And the other interesting thing is yesterday, we were contained within the highs and lows of the previous day. So if we mark off the highs of this day and the lows of this day, and we just box it off here so that we know we're talking about this particular day. This day was really an inside day because it was contained within the highs and lows of the previous day. So no trade. And the previous day, as we discussed a couple of days ago, was near the highs of the previous day, so we really did not have any entry. So that's really the basis of our analysis. That's really where we started off. So today we got a good signal, and that signal is, here's the high of yesterday that you see in these dotted teal color lines, and we opened higher than that price. So one strategy that I shared was, when we have a gap up, what do we do with that gap up? And that is, we wait for either the 5 minutes to close above that gap up and have a continuation of that move, which is a burst move, or we wait for a retest of the previous day's low. And the other strategy that also we employ is, within the opening range of the 15 minutes, when price breaks above it and tests inside that opening range, and we break this trend line or we break this highs, we enter. But the good thing is, we don't just trade with one single strategy. We employ multiple strategies. So what that means is, in today's trade, we already took advantage of this zone. Price opened above the highs of yesterday. Price came down to test those highs, got rejected really nicely, and we entered. After the rejection, we enter near the open of that bar, somewhere in between here. So as we enter this zone, then we calculate what is our risk, what is our potential reward. So even if we enter at the higher place, our exit is a few cents below the range of yesterday's high, and we target a minimum of two right there. And we already know, within a couple of hours from our entry at 7:15 to our exit at 9:15, in 2 hours we have reached our target and we can be done for the day. I did not take off all of my positions here. I took off half of my positions, and I want to ride the rest of them, and I want to see what the market will do tomorrow morning. I still feel this is a strong market, and I have a tight stop. Of course, the tight stop can be run over if we gap down, but my chart is not telling me we have a gap down, so I am leaving that position as is. So the moral of this story today is, we have multiple strategies. We have a gap up, test the highs and enter. We have a support resistance line that was broken. We test those areas, we enter. And on the high side, if we start to see some very strong bearish candles, we can also take advantage of a reversal. We can take advantage of exiting our positions. So by having multiple strategies, we are able to capitalize on entries almost daily. Of course, yesterday and the day before on SPY, I deliberately skipped these days as no trades. No trade is also a strategy. So I just wanted to give you an update. This is how you take advantage of one of the strategies that I've already shared before. Price opened nice gap up. It tested the high of yesterday. It rejected. It never closed below it. It really rejected. And we enter near the open of the next 15 minutes bar. And we take it for a 2-for-1 gain. 2 gains to 1 risk. And as we can see this, then this is fantastic ratio. We're exiting and writing the rest. So this is just a setup that I wanted to bring to your attention, so that we don't just only wait for the opening range bound break. The other thing I will mention here, we'll go back to a few days and then start to focus on each day. And I wanted to show you opening range breaks are fantastic. They're beautiful, but they don't happen every day. For example, on 19th of March, price was contained half the time, was contained within that range. The other half the time, it did not give us a good entry signal, and it even closed back in that range. The next day, it tore to the upside. The following day, you see price bouncing within that range. So this 15-minute range is really a very strong support resistance line, because you see price will gravitate towards it, go away, come back, go away, come back. And when it does break, it breaks really hard. So that's the one advantage that we want to take. Not the small moves, but when it breaks really hard, taking advantage of those movements. As you can see here again, it stayed, up and down, and then once it starts to break and retest the highs of that upper bound, price continues to move up. So this strategy is not trying to enter as low as possible, but it's trying to enter as safe as possible. The safety is the higher priority. So when price is above the opening range, when VWAP is above the mid-mark, and price comes down and does not close below the lower boundary, then we can be safe to enter and take positions. If we don't enter at 1 bar, we wait for a retest, and we got that retest again, and then we were able to capture those moves. So, and as price is making stronger upward moves, I will avoid the put side, the bearish side positions, because sometimes these pullbacks are very shallow. So just wanted to show you that price has a tendency to gravitate around the 15-minute range a lot of times. And when it breaks, it's breaking nicely. And outside of that, it just keeps playing. So that's why it's not enough to just have one strategy. We employ multiple strategies. And here today, we would have had to wait all day when there was another strategy that told us, hey, even though this range is not yet compromised, we have a very good entry by testing the highs of yesterday. So just wanted to bring this up to your attention and see how it was easy to capture these gains. $1 move in 10 contracts is usually $500. So, and in 2 hours, that's $250 an hour if you think about it. And it's a great way to trade, as long as you're aware and able to manage your risk. If it's, entering 10 contracts could cost you, 3,000, 5,000, depending on the strike price that you choose. And are you able to sustain 100% loss on that 5,000? I'm not saying that's what we will do. We are risking a portion, right? To make 500, we are risking 250. So, but in case something drastic happens, this is why I emphasize risk management all the time. Something drastic happens beyond your control, and price collapses and does not give you a chance to even exit your position. It collapses really wildly, and it goes down $5, $6, $7. That's almost your whole contract wiped out. Can you sustain that move? If you can answer yes to that question, then enter 10 contracts. Just because the gain is so beautiful doesn't mean your risk should be neglected. If you are not able to control your risk in this manner, just enter one contract. It is okay to build up to 10 contracts. It's okay for you to start working on that. Once you get comfortable with 10, then you can move to 20, to 30, to 40, even to 100, even to a point where you get comfortable and instead of at the money delta 50, you can push out a little bit out of the money delta 30 or so, and be able to do 100 contracts or and so on. But that just gets too complicated for now. I want to focus on risk management, study these strategies. Once the strategies work for you, then employing bigger contract size by still minimizing our risk would be the next step. Happy trading, happy hump day, and let's come back tomorrow for another great session.